Good morning, everybody. Welcome to CertaPay's Coffee Break series. We are on coffee break number 5 of 2021 already, and we are super excited to have you with us this morning. I'm your host, Rachel Camella, and I am here with our moderator, Cindy Merkel, and we are going to talk about the employee retention credit today. And we're going to cover all your questions, concerns, and issues, so don't be afraid to type those questions in the chat box, and Cindy's going to keep a close eye, and we will get to all your questions. Are we ready to roll?
Trixie's in the house.
Trixie in the house. All right. All right. So we are having this conversation because the employee retention credit is part of the stimulus dollars that are available for business owners to really help get through the COVID crisis. And so the original bill was back in part of the CARES Act in early 2020. And there were a lot of questions and changes that happened, and a lot of people thought maybe they didn't qualify in 2020. And then as a part of the stimulus that was passed at the end of the year, there were some changes. So not only did they change some of the requirements from 2020, but they also extended the employee retention credit into the first 2 quarters of 2021. So what we're talking about is a tax credit for wages paid for qualified employers and for qualified wage dollars. And it's a lot of money. So if you're a qualified employer and you did pay these qualified wages, not just 2021, but also going back to 2020, you may be eligible to receive thousands of dollars in tax credits. So for 2021, we've got 2 quarters to look at, going through the end of the second quarter of 2021 and going back and looking at 2020. So we're going to kind of break them both down. And I want to start with, we're going to start by talking about 2021, and then we'll go backwards and cover some of the changes that applied to 2020. And again, throw your questions in that chat box, and we will discuss them either as we go or at the end, but we won't miss any. So let's first take a look at who is a qualified employer? Well, the threshold is 500 employees or lower, and that is not per location. It's all shared ownership. So if you've got 51% shared ownership across your companies, then you're going to take all those employees and get a total based on that. And so what we're looking at is the number of employees, full-time employees that you had in 2019. And the way you get that number is you look at anyone who worked 30 hours or more. For the purposes of this calculation, we use that 30 threshold. Anyone who worked 30 hours or more in the months, you just count them as one full-time employee. And then you add up all of the employees per month for the whole year, get a total, and then divide by 12. If you were a new business in 2019, you just do the same thing, only divide by the number of months you were operating. If you were a new business in 2020, you do the same thing, only you use the active months that you were in business. So that's how you get that number. So full-time employees, hold on, I'm going to do some muting. And then once you have that, you can kind of start to determine whether or not you are a qualified employer. And then you want to take a look at some of the other qualifying issues. So did you have a decline in revenue? So for and we're going to talk about 2020 after this, but for 2021, we're talking about a 20% or more decline in revenue for that same quarter comparing to 2019. So when you look at this information, now another thing that's really interesting is you will qualify, if you qualify for Q1 of 2021, then you will automatically qualify for Q2. So you want to kind of take a look at that. And when you're using your qualifying number to determine, you can look at the previous month as well. So if you had qualified based on these numbers for Q4 of 2020, then you will automatically be qualified in Q1. And then you would have to take a look to see about Q2 after that. And
Rachel,
so then the other question, yeah.
I hate to interrupt you, but I want to clarify so everyone's on the same page while we're at this slide. The 30 hours are 30 hours per week, correct?
Per week, that's right. 30 hours in a week is how, when you're talking about a full-time employee for the purpose of determining this employee count. And I stress that because it was, you know, we've seen different counts for different things. So for the purpose of, you know, a full-time count for the employee retention credit, we're using 30 as the weekly hours per employee, 30 or more.
Okay, I'll take the rest for the end.
Okay. So the other question is, were you fully or partially, did you have operations fully or partially suspended due to COVID-19 or as a government order due to COVID-19? So if you had your operations fully or partially suspended during that particular quarter, then you potentially qualify. So these are the things that you're looking at to see if you're a qualified employer. Now, we had a question that was very interesting. So what if I'm a qualified employer and I wasn't necessarily fully or partially suspended personally, my business, but I had a major supplier who was. So let's say I had a major supplier who was fully or partially suspended due to COVID, and as a result, I could not receive major deliveries or major components of my business. And as a result, that created a partial suspension in effect for my business. Well, that is a qualifier. So there are some real nuances that you want to be aware of so that even if you think you may not be a qualified employer, you may be. So there are a lot of other components in there that create a qualifying event for this. How are we doing? Any questions so far? Yes.
Yeah, I got the same question twice, so I think it warrants answering it now. The question is, if you receive the PPP loan, can you still take advantage of the ERC credit or not, basically?
Yeah. So this is a great question, and it's one of the changes that they made in that stimulus bill that was passed at the end of the year. So originally, that was considered a knockout. That would make you no longer a qualified employer. And so that is one of the changes. If you did receive PPP funds in 2020, then you could still be considered a qualified employer in 2020 and receive the employee retention credits for that year. Same thing with 2021. So let's say you receive PPP loan dollars in 2021, then you could still be considered a qualified employer for receiving the employee retention credit in 2021. The biggest issue is not to double dip, and you want to be careful to carve out and separate the dollars. So when we talk about a qualified employer, all of those qualifications need to be met. And then when we talk about qualified wages, that's where the question comes in. So if you use PPP loan dollars to cover wages, then those particular wages will not be considered qualified wages. So then what that means is you can carve out the loan dollars and the wages that you're going to use to claim forgiveness on your loan dollars, but the wage dollars outside of that could be considered qualified wages. So yes,
Do you still count those people in your head count? You carve out their money, but you still count them in your head count?
Yes, you can use the same head count for both. It does not change. That doesn't speak to the qualifying wages. What we're talking about with head count is qualifying the employer, and then the wage question is separate. And so let me give another example. Let's say somebody gets a PPP loan of, let's say, $200,000, and then they qualify, or they use all of the dollars to pay for wages. And let's say in their loan period, they paid $250,000 in wages. So you only needed $200,000 in wages to get that loan forgiven, right? So now you separate your wage dollars for your PPP loan, total $200,000. You now have an additional $50,000 in wages where you can claim the employee retention credit, provided you are a qualified employer. So there are a lot of ways to look back and see there may be some dollars on the table that you would qualify for. And we're going to talk about 2020 again in just a bit. But to get those, I know that's the biggest question, is people might say, but I got the loan, what can I do? So it's about carving it out and separating it. And we're going to go back to that again in just a bit. So let's keep going here for 2021. So what is the credit? This credit is basically up to $7,000 in tax credits per employee. So again, you have to be a qualified employer and they have to be qualified wages. So when you look at the qualified wage amount, it's up to $10,000 in wages or healthcare costs. The cap is $10,000 in qualified wages. And the credit calculation is 70% of that. So if you have, even if you've applied for a second round PPP loan and you have loan dollars coming that the disbursement didn't hit yet, you're currently in a window of time where those wages that you've paid may be considered qualified wages. So you could claim these credits up to 70% of the first $10,000 of an employee's wages before you get that loan disbursement. So you want to be very careful to take a close look at the timeline and where is the disbursement if you got those loan dollars. Or take a close look at the wages that are paid. And so qualified wages, you want to be careful here because for 2021, we're talking about wages for actual worked hours, or if you were not operating but continued to pay the employee wages, those are the qualified wages. So let's say you terminated an employee and then you paid a severance or some PTO payout to that particular employee. Those are not qualified wages. And another thing you want to be careful of is if you have, you've got the qualified wages, but as soon as you realize you're going to get the tax credit, you raise the wages that you pay to a particular employee. The wages above what the previous wage numbers were will not be considered qualified wages. So you want to be careful to be consistent on the wages paid. Also, you want to be careful to carve out wages that are covered under one of the other stimulus pieces. So carving out your PPP loan dollars, you cannot use those. Those would not be considered qualified wages. If you continue to use the FFCRA paid leave, so if you've got an employee who's out for a COVID reason and you continue their pay while they're out under the FFCRA guidelines, then those wages for paid leave under FFCRA would not be considered qualified wages. But the rest of the wages for the same employee, if they're actually at work and doing the work, would qualify. So there are some real specific cases where you're going to carve out individual employees' wage dollars as not qualified, but others will be qualified. So when you look at that count, you can still get to that full 10,000 in qualified wage number, even if you have to carve out other things. So the other thing that's different about this package for 2021 is it's going to reset for the second quarter. So we started over in January 1st for the first quarter, and the calculation is 70%, so you can get a maximum of a $7,000 credit per employee up to that $10,000 qualified wage number, and then again, another $7,000 per employee in quarter two. And the way the language is in the bill is it doesn't say a maximum of $14,000 total. It actually says a maximum of $7,000 per quarter. So is there a chance we're going to see another extension where it would go for third quarter and fourth quarter? Maybe. So we'll see how that looks. But for right now, you can do a $7,000 credit per employee per quarter. How we doing?
So far, so good. I did want to back up if you don't mind.
Yeah.
One of the questions was your slide 3 under the who. Do all 4 of those qualifications need to be met in order to be eligible?
Okay, I love this question. So the answer is no. You have to be a qualified employer, and the way you figure out if you're a qualified employer is what's my employee headcount, and did I either have a decline in revenue or was I fully or partially suspended? So those are the qualifying questions. The first one is the employee count, and if you determine, okay, yes, I meet that, then you go to the next question, and the next question is decline in revenue or fully or partially suspended during that quarter as a result of COVID. So those, you have 2 questions that you need to be able to say yes to, and that's what is the qualifier for who. Good?
Excellent. Thank you. And
our qualifying revenue decline for 2020 is lower, or is a 50% number. So we'll talk about that in a minute. So that 20% is for 2021. Okay, how do you get the credit? So the credit is taken directly off your quarterly tax bill. So when you do the 941, the credits are going to come right off of that. You're going to say, okay, these are the taxes due. This is how much I get in ERC credit, subtract it off. Is it possible to have more tax credits than you have taxes due? Yes, it is. And you can do the form 7200. You can even do the 7200 ahead of time. If you project how much do you expect in tax credits for the quarter, send that in ahead of time and get the tax dollars back sooner. If that does not, if you complete the 941 and then you still get money back as a credit, then you can use that form as well. Now, the other thing is get help. You can hear how confusing this can be. Maybe you're not even sure if you're a qualified employer. So ask your payroll provider, ask us, ask your CPA, ask your accountant. There are even some great third-party providers out there that will help you go through all of the qualifying questions. And they can even dig through and see if you're missing some tax credits somewhere. We've had a lot of examples of one of our partners, Higher Tech, and they have found a lot of extra tax credits and dollars available for people that they didn't even know about. So there are a lot of places where you can get some help. And if you're not sure, then this is a great direction to go, because you might end up with thousands of dollars of tax credits that you didn't even know you were eligible for. So pay attention and get help when you need it. How we doing?
We're good. You can continue.
All right. So let's take a look at 2020. This is a place where we're getting quite a few questions. And so the reason is because kind of what I just said. People thought they weren't eligible, so they didn't pay attention to it. And so you may have some credits available from last year. And part of the reason is they said if you got the PPP, you were not allowed to do the employee tax credit at all. And so when you and you didn't pay attention to it, now you can do both. Just like I said, you have to carve out the dollars, and then it's that next question. So once you're like, wait a minute, I think I might have been a qualified employer, now you want to look at where are the qualified wages. So look at the dates after March 12th. So beginning on March 13th, before you got your loan disbursement, there's a chance all of those wages in that window could qualify for the employee tax credit. And you want to take a look at those dollars. Now, the difference is 50%. So when you look at those wage dollars up to $10,000 in wages, now this is from March 12th through the end of the year. So again, take that window where you had your PPP loan and basically carve it out and look at all the wages from before and after through the end of the year. And wages in that window may be qualifying wages up to $10,000 in wages. And the employee retention credit for those in 2020 was 50%. So you may be able to claim quite a few tax credit dollars from 2020 if you're a qualified employer. So to Ellen's question, does everything have to apply? You have to be a qualified employer, and you have to have two situations, either fully or partially suspended or gross receipts down 50% as compared to the same quarter in 2019. Now we have to talk about the employee headcount, because for 2020, it looked very different. Still, the main number was under 500 employees. However, there was a threshold at the 100 mark. So what that meant was 100 employees or under, if you had your employees working or not working, but one of those other cases applied. So 50% reduction, or you were ordered to close or partially close. So if one of those two things applied and you were 100 employees or less, then you could have qualified wages paid to employees who were working or not working, either way. But 101 employees or more up to 500, the only qualified wages are for wages that you paid to employees who were not actually working. So you paid employees while you were ordered to be closed, partially closed, and you paid the employees anyway. Those are the qualified wages for 2020 if you are 101 employees or more. And that employee headcount is all of your locations added together. And if you have 51% owner in multiple businesses, it's all added together. So when you look back on 2020, there are a few more things to consider when you're talking about what wages are qualified wages. Does that make sense?
It's a little confusing.
A little bit, but that's okay. And that's why there are places where you can get help. And, you might try, write down all of the things and what you're not sure of and get help. Talk to your accountant, your CPA, or talk to us, or talk to somebody like Higher Tech, and they will break it down and really determine whether or not you are that qualified employer, and then which wages are qualified wages. So you might have a bunch of money out there that you're not sure of, but let's figure it out. Let's go get it.
Rachel, while we're here, I wanted you to answer Cody's question. It says, I thought the look back for 2020 uses 100 employee threshold per EIN and not aggregated. Is that not true?
No, that is not true. That is an aggregated number. Okay. And, one of the things that was a per location number was the PPP loan dollars. They separated PPP loan dollars per location. And so that might be kind of where you're crossing those two bits of information. But for the employee retention credit, it's an aggregate number. Okay. Now, how do you claim this for 2020? So you need to do that 941X form is an amendment to your 941. So again, talk to your CPA, talk to your accountant, talk to whoever does your 941. And if you were a qualified employer and you've got qualified wages, we simply do that adjustment, that 941X, where you can claim for a refund. The biggest thing about the qualified wages is not to double dip. You can really carve out dollars if you used FFCRA paid leave for wages, if you had PPP loan dollars that you used for forgiveness on wages, then you can't double dip. Now, there was an example of somebody who received the PPP loan in 2020, and then it ended up not getting forgiven. So if the wages that you used to apply for forgiveness for PPP and it didn't get forgiven, then all of those wages now become qualified wages for the employer retention credit. So again, there are a lot of hidden places where wages might qualify. How we doing?
We're good. We'll answer the rest at the end. You can continue.
Okay. All right, so we are basically there. Some of my final thoughts are, keep in mind, this is in place for the first 2 quarters of 2021, and there are a lot of credits available for wages paid. So if you've got your first quarter, it's going to reset for second quarter. You may or may not have the PPP loan this year, so if you're a qualified employer, there are a lot of credits available this year. And there may be some credits from last year available. And that's something that you want to do a little bit of digging and take a deep dive and see if you are a qualified employer, if you've got those qualified wages. Let's get you those tax dollars back. Be proactive, get help, ask the questions, let's figure it out. That money is out there for you, and all you have to do is be proactive to go get it. And the biggest thing has been a theme throughout all of COVID is with all of the stimulus dollars, you just can't double dip. So you want to be careful to carve out which dollars are used for which stimulus pieces. And you may qualify for multiple stimulus components here, but you want to be careful not to overlap them in any way. All right, let's see if we can answer some of the questions for you guys.
Okay, the first one I have, when completing the 941 and show an overpayment due to the ERC, the refund box is checked for the amount of the credit. What has been the experience and actuality of getting the money back?
So that's a great question because we know the IRS is completely bogged down. We know that they are doing quite a few of these right now, and there's a lot of work. So the queue is full, and there's going to be more going into the queue. I know that. Having said that, we have talked to clients who have received money back already. And one of the biggest places that we're seeing some faster turnaround time is when people send that 7,200. So for like current year, where they send that form 7,200 and they get the dollars ahead of time. But the other thing for getting the credits from last year, you just have to be patient. They're working through one at a time. And we have talked to some clients who already had adjustments made, but a lot of people are starting to realize they may have some credits due. So the queue is just going to get full and they're going to get to it one at a time. So I would say, don't bank on the money coming in super fast, but know that it will come in. I hope that was like the longest answer for not giving an answer.
Okay, the next question. How is revenue in 2021 and gross receipts in 2020 defined? And for a nonprofit, does that include donations?
So, I'm not sure about the nonprofit, the answer for nonprofits, including donations or not, but I will look that up and get that answer. So we'll send that to you. It's really basically looking at gross receipts so any dollars that you got for sale of goods, sale of services, the gross receipts that came in, and just looking at that total number and then comparing that to 2019.
Somewhat along the same lines, Rachel, in 2021 guidelines, does it state what is considered revenue? I guess we need to define what revenue is for 2021 a little better.
So I know that on your accounting spreadsheets, revenue can be defined in multiple different ways, but for the purpose of the employee retention credit, it's really talking about that gross receipts number. So how many dollars did you bring in? That's it. Like looking at the total bucket that came in the year or in the quarter, really you want to look at one quarter at a time. So what are the gross receipts that came in? All of the money that came in the quarter. That's the number you're comparing. And again, you're really trying to find a comparison number. So you want to be consistent. Look at all of the dollars that came in the quarter, and then look at all of the dollars that came in the comparison quarter from 2019.
Okay, the next question, it says, do we calculate wages from 3/12 of 20 through 3/31 of 20, then second through fourth quarters separately? You want me to read it again?
So, yeah, I'm assuming what that means. Oh, because March is the end of a quarter?
Correct.
Yes. So you do, because you would be claiming, you do one quarter at a time. And then, and you wouldn't do the second through fourth quarter. You would do the second quarter by itself, the third quarter by itself, and the fourth quarter by itself, because you need to ask those questions every quarter. Am I a qualified employer? Do I have qualified wages? So, and each quarter is independent of itself. Now, having said that, the way, the language is really kind of confusing because it talks about, you will, if you qualify, let's say you qualify in the third quarter, then you will qualify through the end of the quarter, following the quarter where your gross receipts pass that 80% number. So it's confusing, but what it means is whatever quarter you qualify in, you're also going to qualify for the next quarter after that. So if you qualified in Q1 of 2020, you would qualify in Q2. But then you would have to go back and say, okay, did I actually qualify in Q2, or was this left over because I qualified in Q1? And then that helps you determine if you qualify for the next quarter. So you have to kind of ask the question each quarter, and then you do the wage calculations for each quarter. And same thing when you're looking at that 941X to claim refund dollars, you're going to do that per quarter, because you're going to ask those same questions. What were the taxes due? What was the credit due? What's the refund? And that will go per quarter.
Okay, the next question I have, in a nonprofit organization, what do you use for gross receipt calculations?
So let me get the answer to the donations piece of that for a nonprofit organization, and we'll get that out to you, because if you compare gross receipts, then you just use that gross receipts number, but I'm not sure if donations are included in that number or not. Especially because we know with nonprofits, donations are oftentimes a huge driver of the business. So if your donation numbers are also down, you know, that makes a big difference. So let me get the answer to the donation, whether that's included in your gross receipts number.
Next question, what if we qualify in 2021, but only until February 28th when the government restrictions we were under was lifted? My understanding is we would not qualify for March or the next quarter.
So it's based on the quarter. So if you were fully or partially shut down in the quarter, so if that's first quarter 2021, then it applies to the whole quarter. And in fact, because you qualified in the first quarter, you will automatically be qualified for the second quarter as well.
Okay, folks, that's all the questions I have. If you have anything else, last call.
Excellent. All right, guys, thank you so much. Remember, we are here to help you. We have a lot of information, and if we didn't cover it today, reach out to us. We'd be happy to see what we can do to help you out. And as always, thank you for joining us on these coffee breaks. We've had some great topics, and we hear you. So when you want to hear an additional topic, send it our way, and we'll be sure to cover it on our coffee break. So on behalf of CertaPay, we thank you for your time. We thank you for your energy. You are very important to us, and we wish you the best. Have a great day.